Hi everyone, Donnie Schultz, Embrace Home Loans here with markets on Monday. It is May 2nd, 10:30 a.m. Last week we had started the week off on the right foot. We were looking at some big drops in the 10-year Treasury, some improvements to mortgage rates, and we had gone into the week and into that video saying that we were hopeful that that dip could turn into a longer term ceiling and we could see rates potentially start moving in a downward trend and coming off of this uptrend. We also talked about how we were very guarded with that viewpoint. We have seen these dips play out a number of times over the last few months, and rates come down a little bit and then they spike up, and exactly what we saw last week. A couple of days of improvement. Monday, Tuesday started to show some warning signs where we advise clients, hey, take these gains, take these lower interest rates, lock in before they move higher. Wednesday, Thursday, Friday, higher interest rates. Continuing into today, rates are under pressure today. 10-year Treasury is pushing 3%. It's tested it a few times today. That is the highest levels that we have seen since 2018. So we are looking at the highest interest rates that we have seen all year and that we have seen for a few years now. Again, we are anticipating a top coming in soon. So all eyes this week are going to be on the Federal Reserve interest rate decision on Wednesday. That's at 2 p.m. We know that the Federal Reserve is going to come out and be aggressive. Markets are anticipating a 50 bip increase in the federal funds rate, the overnight rate. So you're going to see your home equity line rates go up. You're going to see your credit card rates go up. You're going to see your auto loan rates go up. That typically, though, is not a negative for longer term rates like mortgage rates. Markets are going to start being concerned about economic slowdowns. We're seeing this leak into stock markets. We are anticipating that we are getting close to a ceiling in mortgage rates, but buyers who are going into contract right now need to be defensive because that ceiling might still be 0.25% away, 0.375, 0.5%. That's the most likely scenario moving forward, is that we do see a little bit more pain before we level off and that upward trend in rates reverses and we start seeing interest rates move lower. What do higher interest rates mean for the market? Are home values going to come down? Long Island market, I don't think so. I've talked about this before. I think that inventory is a big problem. I don't see a solution to the inventory problem on the horizon. So rates could continue the home values should continue to increase over time. Are they going to go up 20%? Probably not. Rate pressure and affordability is going to be a problem for buyers. You're going to see buyers come out of the market, so there's not going to be as much competition. We're anticipating that terms of offers are going to become more and more important. They're very important right now. We are putting all of our conventional buyers through full credit approvals, and we're putting them into our value guarantee program. So if you're not familiar with our value guarantee program, what we do is we take a conventional buyer, we put them through a credit approval, we take their income, asset, credit documentation. Our underwriters will approve that file within 24 hours of submission, and then any offers that they're going to make, we'll take that property listing and try to guarantee the value on the offer. If we can't guarantee the value on the offer, we will let the buyer know what value we can guarantee, and that way we can go in and establish a financing plan, and the goal is to waive the appraisal contingency. So it's Approved to Move Plus. I am hosting a lunch and learn on Zoom tomorrow morning at 11 a.m. I highly recommend that if you have availability, probably won't be more than 30 minutes, jump on. We're going to go through the program, we're going to go through the process, and we're going to answer any questions that you have. Great program. We're expecting it to be a game changer moving forward in this market as these offers compress, and we want to be the offer that has the best terms, right? If we can provide a commitment at offer and we could waive the appraisal, take the risk of the appraisal out of the equation when there's financing involved, home run. We're putting ourselves on the same level as a cash buyer with our turn times. Hope everybody has a great week. I'll talk to you soon.